Are we in a downtrend? That's what everybody wants to know. As of today, we have the first sign of the red over red JT multi, where the 8, 13, and 21 exponential moving averages, and then the 34 are structured, suggesting the path of least resistance is showing the first inkling of a very, very fresh downtrend. A couple other things to keep in mind. We've just broken the 200 propulsion. That's also another free tool that you can get over at Countdown Trader. Then we have, what else? We've broken multiple support levels, multiple Darvis levels, right? Not just the Darvis level right there, but also that 200 propulsion. We've broken that as well. These are key support levels. And once we go red over red, this is no longer then about overbought, oversold. It becomes about, can we short the rip? The only thing that's keeping me from just committing to, all right, gang, we're just seeing the first insight of red over red. The only thing, the main thing keeping me from that is the fact that we have on January 26th, so next Wednesday, we have the FOMC. And is there a chance we're going to get a hold? So there's no question about, we're going to see the hold, right? We don't see a hike factored in until March. On the 26th, if we're going to see a change in a bounce or some sort of recovery or relief rally in the equity markets, it's going to come next Wednesday, and we've got to watch the March 22. Gang, this is how you understand macroeconomics. You look at something that's trackable on a rate of change basis, and you ask yourself, what date might we see the volatility, and then which, in this case, which contract are we looking at? So I'm giving it to you right here. We want to see if the Federal Reserve is taking their foot off the gas pedal to rate hikes. We want to see that this March meeting probability, when we get the January, this is where traders can think ahead. This is where we say, hey, we want to see this 25 to 50 column drop and the 0 to 25 start to rally, start to move higher, showing that the market's just not that sure that we're going to see hikes in March. That would trigger a relief rally. So we know there's catalysts. There are hot zones on the calendar, scheduled economic releases that have high impact potential volatility, right? That's where I'm looking at whether or not we finally have a relief rally. But the early indication, this is the NASDAQ, the early indication is the broader average is showing its very first red grab candle. S&P and NASDAQ are very similarly weighted in that they have high concentration weighting from Apple, Microsoft, Amazon, Google, Tesla, Nvidia, etc. So when I look at the S&P, it's flirting with a double red. It's not quite as committed, but what are the things that tell us that the S&P, compared to the NASDAQ, might be still worth thinking about a potential oversold rally as opposed to the NAS? Look, just because the NAS is lower, we have to get granular about index versus index versus index, NAS versus S&P versus Dow. And here we have support at the 200 propulsion. There are certain indicators that transcend technical analysis. They transcend, even traders who think, I'm not a chartist, I'm not a technician. Oh, they'll know where the 200 exponential or a 200 simple is waiting. So this is significant. This is a psychologically impactful indicator. Still neutral, although it's flirting with the red over red. This particular index, the S&P, is valid to say, hey, we are in that 20 area. We are in that 20 area, right? Could we cross? Could we see the cross on this? And by the way, I want to make sure y'all realize that whether you're, whichever version of the layout that I've shared with you, it depends on which room you're in. This version is the free version. This version is the tops layout version. Okay? So just like, and I'll show you where on the ES we started to get a little weak. Do you see this right here? There's your signal. Now this is built into TOS. This is built into TOS. This is the free TOS built-in indicator. So this said, hey, yep, we broke the support and we're crossing back down through 80. Again, quick reminder, don't get too aggressive about moving this thing down to 70. This is what noobs do. Because if you don't understand what that 70 setting really does, it gets you into the overbought region quicker, but it gives you a slower signal to when we cross back down. All right, so a lot of traders make that mistake. They curve fit it, they adjust it to make it trigger faster that we're in overbought with the hopes of getting more signals or more setups. But what they don't realize is crossing back down through the 70 becomes a much slower type of signal. So we don't want to do that. So keep that in mind. So we are down in this area, and because we have a 20 reading, we'll cross back up this a little bit quicker if we're going to at all. But, we have not only that oversold level, right? We not only have that oversold level on the S&P, right? And we also have this Darvis. All right? Look how awesome that is. So thank you, 200. Thank you, Darvis. And we know, having crossed the level down in stochastic, still a choppy market, still a neutral market, we could see a bounce. So I'd be a little bit more, relative to the NAS, I'd be a little bit more bullish the S&P. If we're going to see that bounce triggered by Jerome Powell on Wednesday the 26th. Finally, we get to the Dow. So same thing. I want to make sure what the underlying, let's take a look right here. What is the underlying JT multi? And you can see it right here. Whether you've got the trade flag sitting up in this area, whether you've got the multi, neutral, lower, reflects the 34. That's a neutral trend. Of course, we do have bearish momentum. That's the top row. We're breaking that 200. This could be a little tricky. We're breaking that 200, but we're still neutral. So we know that we have the propulsion. We know we have this Darvis level right down in here. We had a Darvis level even back in here. So just extend these forward. Just extend these forward. You'll see the overlap sometimes. The overlap right there. This is the zone, gang. This is the zone. So if we're going to see that Wednesday, we really want to see this area hold Monday, Tuesday. Monday could be rough, but we really want to see this level hold Monday, Tuesday. As long as this is neutral, we'll look for that slow stochastic to cross back up through the 20. And when it does, it'll give us a signal. And if you don't know how to turn the signals on a slow stochastic, it's built right into TOS. Right? You can just ask it, hey, I want this on, and I would say turn it on slow K and slow D. The slow K I give you all is that, here we go. The slow K I give you all is 21, or I should say on the slow stochastic, it's a 21K 3D. Easy peasy. And then turn the slow K and the slow D on. In fact, I also do this on my custom slow sto. Turn the average type to exponential, so you're weighting more current data a little heavier. This is straight from the TOPS approach to dealing with chop. Use the Darvis and then consult the slow stochastic. How easy is that? All right, so here's your signals down in here, and then the same thing. So we got to wait for those signals, or at very least, wait to get down to that 20 level. So Dow is kind of hanging on. We'd really like to see a minor low. This is what's happening in the markets right now. So yes, on the NASDAQ in terms of maybe heading lower. However, take a peek. No, or let's wait on Tuesday. Now look, I know a lot of folks are wondering, is it going to be, Margin Call Monday? Look, it might be, but look how great it would be if it was. I'd like to see it head down to when I say great, I'm not trying to say yay, market going lower, but I'm saying yay, clarity. Let's get clearly down below the 20. Let's get to the Darvis. Let's test that level. Then we'll take a reading. Hopefully at that point, we've got the Federal Reserve right there on Wednesday for the clarity that we need and maybe that relief rally. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.